Sir, we'll start now. Director, sir.
Yes, please go ahead.
So, distinguished dignitaries, ladies and gentlemen, a very good afternoon. I am Dr. Jagannath Maulik, the coordinator of the lecture series, State of Global Economy, and also the moderator of today's lecture on normal capacity utilization in Switzerland and India. First of all, on the behalf of State Bank Institute leadership, I warmly welcome our distinguished guest speaker, Professor Michael Graff from KOF Swiss Economic Institute, Switzerland, and distinguished expert, Mr. Supriya Majumdar from Reserve Bank of India. Sir, can we have you on the screen? Majumdar sir. Can you come on the screen? I think he will join. Yeah, okay.
No, I joined.
Yes.
Hello.
Yeah.
Yeah, good afternoon.
Yeah, good afternoon.
Yeah, I joined.
To set the context of today's lecture, we know that how COVID-19 has hurt the global economy. Of course, India is not the exception. In India, due to lockdown, many industries had shut down. Subsequently, the insufficient demand that led to the declining capacity utilization of industries. Of course, the capacity utilization of industries, investment, and economic growth are interrelated to each other. For instance, the economic growth in the Q1 of this year in India, that is from April to June, it was negative, that is about 24%, which was most debated not only in India, this is in the global, in the world actually. In the previous quarter, the economic growth was about 3.1%, which is in the month of January to March. Correspondingly, the capacity utilization in these two quarters are 48% and also 68%. In contrast, in Switzerland, these were about 81% and 80% respectively. However, historically, the capacity utilization has been about 84% in Switzerland compared to 74% in India. There is a huge gap. The question is, though the capacity utilization varies with the business cycle, actually what is the capacity utilization in the normal period that can be sustained? So what are the factors? So this is a very relevant topic considering the situation of global economy and Indian economy in particular. In this lecture, we'll have deliberation of the experiences of Switzerland and also India. Of course, these two countries cannot be comparable with each other. Friends, this is the third lecture of the series. I take this opportunity to give a big thank to our participants, our speakers, and experts in our past events and also this event. Next lecture of this series are also coming up. For this, we are very thankful to our director, sir, Mr. Saroj Kumar Patnaik, for being instrumental behind it. With his active support and leadership, we are continuing the event. I request you, sir, to deliver the welcome address before we proceed with the presentation by our experts. It's over to you, sir.
Yeah, thank you, Dr. Jagannath. It's really nice to hear from you. But the credit goes to Dr. Jagannath because considering his domain and his earlier connection, he has created this base of taking SBL into different domain. And he has virtually, we have also part of him, but the main credit goes to the Beyond Boundaries. We have created a concept called Beyond Boundaries. Because of that, we are privileged enough that eminent and erudite person like Professor Michael Graff, Mr. Supriya Majumdar, they are with us. because the concept that we have gone, because basically before I go for my institute, since there is a foreign dignitaries or foreign professor is with us, we'd like to share something about our bank, what we are, a little bit. Ultimately, we are going to listen from you. State Bank of India is a legacy for more than 200 years. It's precisely 215 years plus. It's a leading financial service group in India with assets of $590 billion. SBI is ranked 236th in Fortune Global 500 list of world's biggest corporation. It has 22,141 branches, including 200 plus overseas branches in 32 countries. With its 250,000 competent employees, SBI provides banking services to over 449 million customers across the globe. You can, our customer base can be bigger than so many small countries also. What I'm trying to say is a big banyan tree, or it's a big institute, and travel the travesty of the time, and it has stabilized here. But here the training in SBI is proactive, planned, continuous, and an integral part of our organizational development. If you go through there are 6 Apex Training Institute, as well as 51 regional level state bank institute of learning and developments across the country, and nearly 400 plus practicing bankers with excellent academic records. They are being placed here. Here I'll come back to my institute. My institute is State Bank Institute of Leadership. It's a strategic leadership. Here the main focus has been given on leadership, management, and banking research. In this regard, this research fellow Dr. Jagannath is with us all. The basic idea is connecting with so many research areas with Japan, Russia. Now coming back to this, we are trying to connect with a wide spectrum of issues at the same time, a wide spectrum of eminent people. So this is precisely here, and RBI is our controllers, and it takes care of all the financial. And because of that, Mr. Supriya Mazumdar, who is the Director Division of Enterprise Survey, he is along with this. Considering his checkered career, I am sure he is going to give the value addition to the entire discussion. At the same time, I'd like to speak a little bit about when my new chairman has taken over. His main idea in this present situation, pandemic, is to create a positive energy which would help the individuals or organization to tide over the most uncertain and difficult times. Everyone is going through this. Just before this, I was going through, there is a TV news, there is a 2+2 interaction with India, US. Not only there we are going with the military and other things, but the main thing, how to fight the present situation of COVID-19. Here, chairman has given a distinct and clarion call that is, STU should think of ways to create wave of positive energy with the bank and outside also. With this domain, we are here, and really we welcome the 2 eminent personality along our domain. And here I'd just like to, before regarding the topic, I would like to share a few things. This COVID-19 pandemic has spread an alarming speed, infecting millions, bringing economic activity to a near standstill. If you see, it has really literally created a halt. When the lockdown had started in India, considering its diversification of the demography or industry or people, the way people started creating a situation, it is unprecedented. So during this kind of situation, whatever the present position or whatever the thought process, it has gone really in a topsy-turvy manner. Really, there are a few factors which has really affected us. There is a decline in consumption, restriction on movements took place, poor expectation of future income, because income has also, because there are many areas people have been affected so far as employment is concerned. Erosion of wealth is there, declining in investment is there. Uncertainty has created this kind of situation. Poor expectations so far as future profitability is concerned. Increasing government expenditure is there. It has now confined to either pharma or medical. In the core issue also, government has also taken steps. Welfare measures has taken over in the first priority. Then declining net export, when the supply chains of export has also come to a grinding halt. What we are trying to say in this situation, when we are talking about the capacity utilization, what are the normal parallels, what capacity utilization, what we understand is, it is the extent to which a firm or a nation employs its installed productive capacity. It is the relationship between the output that is produced if the capacity is fully utilized. But that is not the position. Here we are not being utilized the way we are expected, because this is something no one, because being a common man, I am saying March 24th, when it was being announced for this halt, that time we thought it would be for some time, for a week or so. This is a new concept, it has come, but it has made our life in a different steps altogether. We have thought in a different manner. Now it has come to, because people are being restricted, confined, the movements has also come into grinding halt. And the projection which has been given for the developed nations like United Nations, the projection is in 2020 is minus 5.9 so far as GDP is concerned. Germany is minus 7.0, France is minus 7.2. In Asian countries, everyone is going for 2020 is in minus. What only China is having some 1.2 and India is 1.9. What I'm trying to say is everyone is very badly hit. And here your discourse or your deliberation is definitely going to enlighten us, and definitely there will be definitely certain takeaways which is going to help us, for which SBL is creating this kind of platform. And time and again we are visiting with different topics and coming with the eminent people with the specific domain areas, which is going to, and moreover we are going to put this into your YouTube and Facebook platform. So it has got a wider base so far as people connecting and learning from this. So thank you very much, sir. Thank you very much. You are being here, a professor and doctor, and we are really feel privileged you are there. And especially to Mr. Michael, I request whenever you'll come to India, please come and visit our institute. It would be a privilege for us. And Mr. Supriyo Mazumdar, as a RBI functionally, you are always our controllers. But being a facilitator, sometimes whenever you come to Calcutta during the normal time, at least it would be a privilege to host you and to make you to interact with our participants. That is my desire. Now over to Mr. Jagannath. Please moderate and take it forward. Thank you very much. Thank you.
Thank you, sir. Thank you, sir, for your remarks. I really have set the tone for our speakers. So with this, it is my great pleasure to invite Professor Graff to deliver our third lecture about Professor Graff. He's working at KOF, Swiss Economic Institute at ETH Zurich. His area of research are economic growth and development, particularly macroeconomic modeling and forecasting. Professor Graff received his MA and PhD in economics from the University of Hamburg and a second PhD in economics from the Technical University of Dresden in Germany. In 2003 and 2004, he worked as economic advisor for the Reserve Bank of New Zealand in Wellington. From 2005 to 7, he was senior lecturer in economics at the University of Queensland in Brisbane, Australia. Since 2007, he is heading the macroeconomic forecasting division of KOF Swiss Economic Institute. In 2012, he was awarded the title of Professor of Economics at ETH Zurich. About his academic achievement, he has a long CV of about 35 pages. Obviously, he has more than 100 papers in reputed journals and 3 books into his credits. And he delivered more than 100 lectures in seminar conferences in many countries. He has received various prestigious awards from various international bodies and as a member in various committees. He is chief editor in 3 prestigious journals and as a referee to a number of journals. He has completed a number of sponsored projects which amount to more than $1 million US. First, I met Professor Graff at OECD conference in Paris. As a person, he is very down to earth, and I realized he is approachable. So I requested him to deliver a lecture to us. We are very thankful to you, Professor Michael. So it's over to you. And one request that please take 40 minutes and please be very simple and not to make it technical. It's over to you, Professor Michael.
Thank you, Dr. Malik, and thanks to Mr. Patnaik, for the invitation to Calcutta, which I'll keep on my mind for the times after the pandemic. So it's difficult times, and I'm still not quite used to these online seminars. So can you all hear me? Or am I visible and audible? Okay.
Yes.
And now I'll try to turn to my presentation. Can you see my presentation slide?
No. Please upload it. Yeah.
Okay. I'll have to see that. So let me see how I do this. Inhalte freigeben, ja. You see it now?
Yes.
Can you see my?
Yes.
Okay.
Yes.
Good. So I'll try to maximize this. Right. Now, my talk is determinants of perceived normal capacity utilization, evidence from international panel data and Swiss microdata. And this is joint work with two colleagues from our institute here in Zurich, Richard Etter and Martin Wörter. They are not present, so it's on me to present our joint work. Now, as a start, I have two time series plots, and the big question is, what do they represent? Given the title of the presentation, it's probably not too difficult to infer what it is. The green line is capacity utilization in manufacturing in Switzerland from 1970 to the second quarter of 2020. And the blue line is the same for India. Well, two things stand out, and it was already mentioned by Mr. Patnaik that capacity utilization has different levels in Switzerland and in India. In Switzerland, it lingers around somewhat 80+%, and in India, it's something like 75%. Well, and what we, of course, see from the 1970s to the very present, we see the ups and downs of the world economy, which always affects Switzerland a lot. So we see a pronounced trough here in the global financial crisis, and we see a downward movement at the very end, which is, of course, due to the lockdown of the coronavirus pandemic. Well, and for India, the time series is shorter. That's all the data I could get for India. And we see a pronounced decline, far more pronounced than in Switzerland. And that's, of course, the massive onslaught of the pandemic to the Indian economy. So Switzerland appears to have been more resilient. We see a lot of variation in this. And now, how are these data generated? In Switzerland, they are generated by business tendency surveys amongst firms in manufacturing. And I met Dr. Malik at a CIRIT conference, and CIRIT is actually an organization which is promoting this kind of research, business tendency survey, and what can you get from it. This is standardized throughout Europe, but not standardized in the rest of the world. So I cannot guarantee whether these two series are actually measured in the very same way. Okay, but I think the idea behind both of them is that they give an idea of how tight the pressure is on technical capacity. So that's in macroeconomic terms the factor of production, physical capital. And there are some questions related to this. And first of all, it's an interesting variable, and it's particularly interesting for monetary authorities, central banks and the like, and for business cycle forecasting, because it gives you an idea of the output gap, or a part of the output gap, right? So it's a very good variable. It's a variable which is available practical in real time. But the big thing is, of course, how to interpret it. Okay, and if we want to see where we are now, we can take long-term averages. Big question is, which value should we include? How should we deal with outliers? Or we can try and get an idea of what normal capacity is. So that's what my talk is about. here is translated into English from our quarterly questionnaire. Britain is still part of the European Union. They are running the same question. So that's the question that would be asked in English-speaking countries within the European Union. During the last 3 months, our average utilization of technical capacities amounted to so and so many percent. Okay, well, that's the questionnaire. That's how the data is generated. And the idea behind it is that we have a macroeconomic production function, and capacity utilization relates to the factor of production K for physical capital. We have other measures of macroeconomic capacity utilization. If we take unemployment, that would relate to the factor of production L. Well, and the output gap, of course, relates to the degree of utilization of all factors of production, right? So we capture part of the output gap. And now from business cycle research, we know that there's a sequence of events in the business cycle. So the capacity utilization is reacting first. So when businesses have slack in demand or increased demand, they do not start to hire and fire people immediately, but what is first adapted to the change in situation is the physical capacity utilization of the equipment of the firms, and this feeds into the output gap, and in the end employment will react. So there's a sequence of events, and capacity utilization is probably at the start of the sequence. Okay, so that makes it in additional interesting. We are used to the neoclassical output gap these days, and the neoclassical output gap is taken from some textbook here. I think you know this textbook, it's most widely used. There is a flaw in this graph as taken from the textbook, because this would have been the log of output, so I corrected this. Now, here is potential output growth, okay, straight line, time against the ln output. That means exponential growth with a constant growth rate. That's the potential growth rate, something like maybe 2% or 1.5% in Switzerland, way more in India, given population growth, and that there's a lot of potential for catching up with the rich guys. Well, and then we have the true output, and the true output is kind of oscillating along this output graph, output growth, right? And here the output gap is closed in these situations. Here we have a positive output gap, and here we have a negative output gap. And for central banks, a positive output gap means there is a danger of inflationary pressure, and a negative output gap, there's slack in the economy, and we can make monetary policy less tight. Okay. Well, now I added something which relates more to how we measure our capacity utilization in our surveys. And this is the green line, and that's more related to the traditional Keynesian understanding of the economy. And the traditional Keynesian understanding of the economy is that there is practically always some slack in the economy unless the government steps in, right? So in the best of situations, we will be very close to potential, and in normal times, we are more or less down from potential. So it's a downward shift of this actual GDP. And if you recall these two lines, our capacity utilization as we measure it in the surveys is more related to this Keynesian concept. Okay, so again, the question, how do we relate this to the output gap? What do we take from a current reading of capacity utilization of 70%, 80%, or 50%? Okay, that's a big question. We need to have a good interpretation. Now, the motivation of this research, and it's research in progress. A working paper is due to come out before the end of this year. I'll send you a copy for distribution if I succeed to get it ready in time. The motivation is the idea that the normal rate of capacity utilization, and I call this norm CAPU, is probably not a stationary variable. So if it's not a mean stationary variable, historical averages are not helpful. Okay. And we try to identify the level of norm capacity utilization from international data and from Swiss data. And the advantage for the Swiss data is that we have access to microdata. Okay, for the international data, I have to resort to what I find from the OECD, from Eurostat, and from the websites of research institutes and central banks and statistical offices across the world. Now, I have two null hypotheses. And null hypothesis, remember, is the one we want to reject in order to find something significant, okay? So one null hypothesis is that average capacity utilization is constant, and the other one is that normal capacity utilization is constant. And as you see here, my prior assumption is that I should succeed in rejecting this null hypothesis. What are the alternative hypotheses? So one is that average capacity utilization could be higher than some decades ago. And I'm not going into too much detail. That would be a completely different strand of research. But suffice to mention that in recent decades, there was a lot of rapid technical progress that in principle would allow to have changes in logistics, more just-in-time production, so that you could operate with less slack. Okay. Another hypothesis that increasing competitive pressure due to globalization and opening up of markets would wipe out any firms that sustain too much idle capacity, again, wiping out those with low capacity utilization. And we could have technical progress being embodied in capital goods, right? And if this is true, the relative price of capital could rise as compared to other factors, which would incentivize firms to use less capital or to have less slack capital because it's becoming relatively more important. Well, if we take a look at the other alternative hypothesis, it could also be that average capacity might be lower than some decades ago. Globalization subjects firms to worldwide competition, and those who don't have any idle capacity to react quickly when there is demand will be wiped out. Or technical progress may create complexities that require an increasing share of means of production to remain idle as buffers, right? So going through this list of arguments, certainly not complete, the results are ambiguous, right? So there are good arguments in favor of increasing capacity utilization across time and decreasing capacity utilization. So the null hypothesis is therefore open both directions, okay? Now, let's have a look at the international data. And the international data, as mentioned, are from various sources. Most data are from the OECD, but if you look around carefully, you find a few additional data. And within Europe, these capacity utilization measures actually mean the same because the questionnaires are the same. For other countries, well, let's assume that they are more or less reflecting the same reality. Here's my panel. It's quarterly data starting in 1970. It's only 3 countries which have data going back further than 1970. So I stopped here. And what you see is that there is increasing numbers of countries as time goes by. Particularly in the 1990s, we have more and more countries, and that's of course the previous socialist countries who started their transformation and started to measure things like the rest of the world. So we see more and more countries, and even in this apparently chaotic picture, we can see the worldwide business cycle, right? We can see the troughs in the 1970s due to the oil crisis. We can see a trough due to the IT bubble. We can see a pronounced trough here in the global financial crisis. Well, and the data end in quarter 4, 2019, so we don't know what's happening here at the very right margin. But I'll go into this when I look at what we see in Switzerland. Now, if we want to infer regularities, it's probably a good idea not to look at 2020, because 2020 is unusual in every respect. We have a global recession, we have a global crisis, which is not originating within the economy, but due to the spread of the virus, and measures have been taken which, well, similar effects on the economy. We have to go back to the Spanish flu in 1918, 1919. Right, so, and something else we can see, that there is some heterogeneity. And the heterogeneity I can see from this graph is that those countries who pop up in this chart in the 90s start from very low levels of capacity utilization and apparently to some degree converge to the rest of the field, right? And that is, of course, a reflection of the fact that when the previously socialist countries opened up to capitalism, the first thing that happened is they had a bad recession, right? And they started from very low levels and kind of they're catching up. So if we want to infer regularities from this, we have to be careful. Right. Here's a stylised fact. Here I'm averaging the capitalist countries, the countries that have always been capitalist, and here's the transformation countries, right? And we see this upward movement, this convergence. No convergence here, and here they are practically correlated, very close to one, but the transformation economy still experience somewhat lower levels of capacity utilization. Now, if I want to get some statistical findings from this, what I suggest to do is to run a panel data regression. So all countries, all points in time of this capacity utilization, country I, quarter T, and I regress this on country fixed effects, because every country may have its own normal level of capacity utilization, and so and then I regress it on some measures of the output gap, and in order to purge the business cycle from that, and then I add an interaction effect of the output effect and the dummy variable for transition economies, and here is my regressor of interest, a variable for time. Okay, I regress it on time, and I have a look at this delta. And the estimate of delta is giving me the change of capacity utilization across time, considering different output gaps in the economy, and considering that the output gap has different effects on capacity utilization in transition economies and economies that have always been market economies since 1970, plus all the individual normal levels. Okay, so that's probably the best way to distill, to purge all the other influences to arrive at an estimate of the influence of time. Okay, well, and this estimate is significantly negative. Okay, so significance 1%, highest level we usually use. And if I interpret the effect that I have, I get a decrease of about 1.5% per decade. Okay, that doesn't seem very much, but well, one decade is not very much in the history of the world. And within a century, that would be 15 percentage points, right? So this is a finding which, to some degree, may be a surprise that it's so much, okay, and it's so significant. So typically, or taken as a whole, capacity utilization has declined. We can reject the hypothesis that average capacity utilization is constant, but there's a lot of heterogeneity. Okay, that's why the results, even if I could distill the effect of time, is probably not too informative. We have to look at what's happening in particular countries. We have sampling effects in the earlier year, and the transformation economies start from very low levels and increase swiftly. Case studies are probably more important or more informative, and I turn to this now. And this is our Swiss microdata. And Well, this institute has a long history. It's going back to the 1930s. But our history started to ask questions about capacity utilization in 1967. Well, 1967 was the age before computers. That's how the questionnaire looked like. And the questionnaire was sent to firms. And it says our technical capacity utilization is equal, higher or lower than in the previous quarter or in the previous year. And then the quantitative question, capacity utilization reached, and here we gave them 5% intervals, right? Well, and it starts at 50 and goes up to 125, so it's not evenly distributed along 100. So the idea is probably more the Keynesian idea of capacity utilization than the classical, but still we allowed them to have pronounced stress on capacity utilization in boom phases. Well, and then a prospective question for the next 12 months. Our technical capacities are just okay, too high or too limited. Since 2004, the questionnaire looks like this. And as much as it changed, the history is so that we can construct time series which go back to 1976, right? So that's how it looks today. We still give them 5% intervals, but we stopped giving them values up to 125 because they were never or hardly ever ticked. So that's the data generation process. These days, firms get it by mail or they respond via internet. So capacity utilization, we have a qualitative question with just right, too low, too high. We have a quantitative question. And now the simple idea in order to infer what normal capacity utilization is to have a look at the microdata and combine these two by firms, okay? Select only firms that have ticked our capacity utilization is just okay and average their quantitative results, then you have normal capacity utilization. You don't consider firms that have ticked capacity utilization is too high or capacity utilization is too low, just those who say, well, it's okay, it's normal, right? Select firms answering to no, then you have average for firms with less normal capacity utilization. Select firms answering too high, the average of these firms is higher than normal capacity utilization. In principle, as I said, we can go back to 1976, but the data issue turned out to be very complicated. The people who stored the data in the 1960s and 1970s are retired, or some of them have already passed away. The documentation is wanting, and the GDP accounting and sectoral disaggregation changed a lot. So there's a long story of unanticipated difficulties. And when I started this project, our IT guys, our data specialist, had long hours of work in order to deliver what I asked them to deliver. So let me give something to take home for you. Be aware that whatever you do, you might produce data that are of interest to posterior researchers, right? So imagine that 50 years ahead, someone may be interested in what you have done, what you have measured, what you have recorded, and try to save this in a way that these guys in 50 years in the future can make sense of what we leave behind, okay? Add proper metadata and store all vintages. That's important. All vintages of data safely and recoverably. Now, what I was able to do in order to go back with our microdata to 1975, I didn't manage to go back all the way to 1967, is to merge two different sets of data. And this is the early set of data, the early standard, that is the later standard. And as we can see, they are not identical, but they coincide. Okay, so this is as far as we got in recovering the data back to 1975. There was no way to recovering back to the 1960s, unfortunately. And if we want to make inferences about the very long run, what happens to capacity utilization, we want to have as many years covered as possible. Right. Now, with these data, starting 1975, and with the macro data, we can take average capacity utilization across all firms, that's the black line, and we can have normal capacity, average capacity utilization being the gray line, and normal capacity utilization being the black line, okay? And what we can see, which to me, it was a surprise because I had no prior assumption. Normal capacity utilization tends to be higher than average capacity utilization. Okay, that means there are practically always, not always, but practically always when this gray line is lower than the black line, there are numerous firms who report that they are below what they consider adequate, right? So normal capacity utilization and average capacity utilization are indeed different, okay? And just remember the international graph. The international graph was average capacity utilization and not normal capacity utilization. Okay, for some of the countries, microdata may be available, but microdata are a big issue. And of course, there is confidentiality is an issue. We survey firms, and firms don't want everyone to know how they report their capacity utilization, especially not their competitors. So it's probably that within countries that institute where these data are generated can replicate this and take the macro data and compute normal capacity utilization. Well, just to complete the story, we can also compute positive or the average of those firms that report that capacity utilization is actually higher than desired, and the average of those firms where capacity utilization is actually lower than desired. And we see that only once is the average above 100%, right? But still, the average of those who report higher than normal is pronouncedly higher. But the deviation of normal or average for the firms that report lower than desired capacity utilization, so firms which are potentially in trouble, is way more pronounced. Okay, so the negatives turn the average down. Now, if I want to infer something about the time trend, I have to get rid of the business cycle. Okay, so even those firms that report things are just as desired somewhat accommodate their answers to the business cycle. Okay, we see the cyclical and components in the crisis more pronounced in the average than in the normal, but there's still some pronounced cyclicality in the normal, as you can see. So we have to get rid of it. And to get rid of it is just with, like in the international setup, let's find some variable which captures the business cycle, and let's regress normal capacity utilization on this business cycle variable. So the business cycle variable captures all cyclical elements which are in the answers of those firms that say capacity utilization is just as desired. And what we are left with is a residual, right? And the residual is normal capacity utilization purged of the cycle. Okay. For this variable, I've considered various variables. I don't want to bore you with statistics and econometrics. Also, in principle, I can break down our manufacturing data to two-digit branches, but this turns out to be very difficult to reconcile with the past, so I'm not going to give this in this short presentation. What I'm giving you here is what our selected business cycle variable is for the result. I show you that's just the year-on-year growth of Swiss GDP quarter after quarter, and running a cross correlation, I see a pronounced lead of capacity utilization before growth of GDP. So I see this lead confirmed 2 quarters. So I shift this variable 2 quarters before I regress capacity utilization on this variable. And that's what I'm left with. Okay, I'm left with a time trend which is significant and sorry, that's the t value, and that's that's the t value. So the constant is 83%, and this is the business cycle variable, and the business cycle variable is significantly positive, and we have an R square of 30%, which is not too much, but at least we get 30% of the cyclical variation by this regression. Now, if I plot what is after having taken the cyclical element out of this regression, this is something which is still going down, right? So wherever we start, wherever it's going down. So the Swiss microdata confirm what we have seen in the international panel. From the 1970s to the 2010 years, capacity utilization has been going down by and large. So I'm ready to sum up. Which rate of capacity utilization is normal? Is it constant? Is it increasing? Is it decreasing? Prior assumption looking into theories or into how business are run and what technology has done to businesses, all these changes, everything is possible, right? But having said everything is possible, my findings, both from the international data on average capacity utilization and the Swiss data on normal capacity utilization, reject the assumption that it is constant, and more precisely, there is a lot of evidence that it's decreasing rather than increasing. So taking long term averages to see where you are right now is probably not a good idea, because it's definitely not a mean stationary variable. I think it's related to technical change, but more research is required for sound explanation how exactly technical change affects normal or average capacity utilization amongst firms. And of course, events like these are also affecting normal and average capacity utilization. So if we look at 2020 and the years to come, the challenges are even more demanding than what we have been facing so far. So I've come to the end of my presentation. Dr. Malik, I hope I have not exceeded the time allocated to me, and I'm looking forward to the rest of the seminar. Thanks for now.
Thank you, Professor Graff, for the interesting challenging work and your insightful presentation. We have with us our experts on Indian economy, Mr. Supriyo Majumdar from Reserve Bank of India. About him, he is having 31 years of experience with the Reserve Bank of India. Presently, he is working as Director, Division of Enterprise Surveys, Department of Statistics and Information Management. He has expertise in the measurement and analysis of capacity utilization, and has been also working on several other areas, including financial stability, banking statistics, balance of payment statistics. His significant experience in stress testing, statistical analysis, large database management, and software programming. He has been associated with the preparation of Financial Stability Report of RBI, which is the annual report of RBI. He was a member in various working groups, subgroups on rationalization of returns furnished by scheduled commercial banks to Reserve Bank of India and NABARD, and designed the umbrella system which proposed an item-based reporting system to replace the currently followed return-based reporting. Sir, I would like to invite you to make a presentation on India and provide your input to the presentation made by Professor Graff. It's over to you, sir.
Thank you, Dr. Jagannath.
Yeah, Professor Graff, you can on-share your presentation. Yeah. Professor Graff, you can take out your presentation.
Oh, sorry. Okay.
Yes.
Thank you.
Thank you, Professor Graff. It's a nice presentation. Sorry. Go to. Yeah, good afternoon, everybody. Am I audible?
Yeah, you are audible. Your presentation is not visible.
Not visible still?
I can see it.
You can see? Oh.
I can see it.
Okay then. Okay. So I have.
I can also see it.
Okay. Yeah, carry on.
Okay, thank you.
Yeah.
Thank you. It's a privilege to be associated with for this particular issue on normal capacity utilization and with the SBIL. Basically, what I will go through is Professor Graff has already given a lot of technical inputs as well as the explanation and econometric analysis. How the capacity utilization should be viewed and what are the basic comparison between Swiss capacity utilization and Indian capacity utilization. So what I will look into, I go through a bit by slowly with a kind of giving a basic introduction. So the scheme of presentation is slightly, some of the things I will just go quickly so that it will, that kind of background may not be required because a lot of things have already been covered by Professor Graff. So there is we all understand the significance of capacity utilization. Then there are various approaches. The current approach which I will be presenting is basically a survey approach. In the Indian context, that we will try to see in great detail, little detail in Indian context, what is the capacity utilization estimation and slight comparison, though it is little of this is dated, but some kind of comparison with the other countries, and finally the assessment what we use in the monetary policy. So it's a very important economic indicator. So it looks so low. It tells a single indicator tells a lot of gives a lot of information. One is about the productivity, that is efficiency, productivity. Then output gap alternate indicator. Then also it is helpful in assessing the demand pressure and investment prospect. Right now, what we since it has already gone down to a large extent, capacity utilization has just fallen to the very low level. So it will how it should be interpreted. Now we will look into the it naturally from the monetary policy point of view. It gives an indication about the incipient inflationary pressure. That's what it is very important for all the central banks. Now, there are so many approaches of capacity utilization estimation. One is the generally, because in Indian context, we are using right now the survey-based approaches, but basically it can be for long time series construction, using the water method or some other method, basically industrial production data can be used. Time series econometric analysis, Professor Graff has already shown in case of Swiss as well as the panel data regression, how it works. But of late to understand is better way, the survey-based quantitative analysis as well as qualitative survey, which is basically the business tendency surveys, which gives some kind of future outlook about the capacity utilization, is very much useful. Now, Indian context, lot of surveys have been done. The three more important capacity utilization estimation providers are RBI quarterly surveys we do, that is the order book, inventories, and capacity utilization survey. And also the forward looking, we get a industrial outlook survey we do. This is the quarterly survey, which also gets about the outlook of capacity utilization in the next quarter. Now, FICCI, Federation of Indian Chamber of Commerce and Industry, they also do some kind of business confidence survey and manufacturing survey on Indian manufacturing sector. Through that, capacity utilization is available, is a small survey. Then National Council of Applied Economic Research also gives a quarterly business expectation. This is basically the qualitative assessment of the capacity utilization, among other estimations. Now, in Indian context, the order book, inventory and capacity utilization survey, that is what we call OBICUS, was initiated somewhere in 2008. And we are using some a fixed kind of sample frame manufacturing company, which is over every year those are incremented with the new companies. So capacity utilization basically is a very simple calculation. I will go into little detail in the next slide. And industrial outlook survey, was started much before that. That was in 1998. And through that, we want to get some kind of assessment as well as expectations on various demand condition, employment, their financial situations, their input prices, output prices, as well as overall business situation. So, which includes capacity utilization, of course. So, this is the expectation assessment for the current quarter and outlook for the just next quarter. Now, these kind of so it basically the industry IUS is used as a complementary to OBICUS, because this gives actual information about the capacity utilization, about the past quarter, and this gives the current and the next quarter, the expectation. This is the future outlook. And the qualitative survey, basically we use some kind of net response kind of indicator, and that is basically the proportion of positive responses and proportion of negative responses, so that we can get directly the how many people on net basis are expecting the indicator to move, whether it is in positive direction or negative direction. Now, next is this is basically the format in OBICUS through which we get the capacity utilization information. So this is basically we get a product wise. It's not a so the survey is enterprise level, that is company level, and company level they give information on for each of the major products. So there, how much capacity utilization, how much is they have the installed capacity, what is the unit, whether it is in weight, whether it is in numbers, whether it is a length. So it can be various kind of units. So in that unit, how much is the installed capacity and how much is the quantity produced, so that we can directly calculate the capacity utilized, and as well as the value of production. So based on that, we can get the price, and then we can also calculate value of the installed production. That is the installed capacity. So price can help us to calculate in price in rupee term or amount per term. So once we get this information based on some kind of weighted average, so we calculate the capacity utilization as aggregate level. First, it is the firm level, product level, then industry level, using the value of capacity, installed capacity, and then we use at an industry level the gross value addition for each industry, that is coming from general ASI 2004-5. So we get a value 2013-14 ASI, so we get a gross value addition from there used for each industry group that is available in NIC 2008. So from there, the installed capacity is multiplied and we get a aggregated average capacity utilization. So it gives a very, very detailed information we do collect and get a capacity utilization information. And this we do publish the aggregated one every quarter. Now the numbers. So capacity utilization, you can see in Indian context, has been almost going on in a very in a last couple of years. It's almost as a flat. It was almost flat, but last 1 year back, it started falling a little, and this is basically a pandemic situation. This is a sharp fall, one of the sharpest in the world for any country. So this has suddenly fallen because of the pandemic situation, because of lockdown, because of factory closures. So everything was at halt. Now that is what is the situation. So this we are getting from the Industrial Outlook Survey. Industrial Outlook Survey, we ask a question whether next quarter, in the current quarter, what is your outlook? What is your assessment? So this was the assessment in Q1. So it was a sharp fall, and that has reflected there also in the actual capacity utilization later, which was collected. And now it shows there in the next quarter assessment is slightly up. Now we also usually we always collect the expectation only for 1 quarter ahead with respect to the current quarter. But since because of this very difficult situation world over because of pandemic, we started asking this expectation question extended for the next 1 year. That means for the next 4 quarters, so that because in the immediate quarter, it is very unlikely that things will suddenly improve. It cannot. It is very difficult. So what should be the growth recovery path? Just to have an understanding from the perspective of the manufacturer themselves, we want to have one is econometric analysis from the past data using a lot of models. One kind of forecasting can be done. This is another way of getting a aggregated view of the manufacturer themselves, who are, what I generally say, is the real actors, who are players. We are analysts, give a different view, but the real actor, because their money, their future, their company, everything is involved. So their understanding will drive what they do. So in that sense, their outlook for the future is very, very important. So this shows that over a period of time, can be some recovery in the current quarter. This we are expecting, and the next quarter, slowly this will start picking up, and by the end of the year, the capacity utilization may reach to somewhat nearer to the average level. It may not be exactly the average, but it may be somewhat nearer to the average level. Now, if we see this, the long term, this is another capacity long-term average. In Indian context, long-term average is around 74.6. I have omitted this 47.3 to calculate this average. Earlier, the average was around 75, so it moves around. So it is surely come down. And another thing we can see is basically the post 2018. This is basically one business cycle which we can see. And the next slide is showing the business cycle in Indian context in a simpler way. This is nothing but calculating annual averages. So each one is annual average. This is the financial year average. So annual averages shows that initially there was this cycle was in a positive mode, upper side. That then once it moved slowly in 12, after 12-13, it started moving down. It was in the lower band, and just before the 1 year back, actually our understanding was at that time that we have already reached the bottom of the cycle, and slowly it will start moving up. Now we can go to the expansion zone, but expansion zone in terms of the long-term average. But just before that, there was some kind of downturn, and now we have come to the lowest bound to the decade-long lowest bound in terms of capacity utilization as well as the production, growth everywhere. So that is a unusual situation. This is basically a general business cycle and CU cycle kind of relationship that is very Professor Graff has already discussed in detail. So current downturn, what can happen? Basically, it is happening because of its aggregate demand, and it is a textbook kind of analysis, nothing new. So basically, the good demand has fallen. So output gap is become negative. Naturally, the unit cost of production will be for each company will be very high. So their profit margin will be definitely impacted because of overhead cost will be driving the cost, and it can impact the employment, which has already happened, and the capacity utilization now for future, for some time at least, the investment is unlikely to be very positive climate. And of course, one thing out of all these negatives, one is the demand pull inflation pressure would definitely will be contained. So that is from the monetary policy point of view. But all other economic point of view, there is all are negative aspects. So recovery has to start. Now, how to recovery to start? Only if we can improve the demand. Only if we can improve, which will help to that unit cost of will start falling, and then slowly investment will come in. That's the only way to do that. This is the little but old study, sometimes in 2016. So it can be extended. It can be seen that capacity utilization and output gap relation in the Indian context. So you can see here that movement of capacity. I have given the source also. It is already published document. So so you can see there how the capacity output gap and the capacity utilization, how it has moved in tandem. And this is which follows the theory. Now the correlation is, if you see, correlation is very high with output gap and capacity utilization is almost 0.8, and with 0 or 1 quarter lag, the impact is really felt. Now, next is that's what I told is a list a bit dated, but because in Indian context, if we see, we are though it was earlier, we have reached to some kind of higher capacity utilization, but in the last couple of years, we are actually we have come down to a lower bound. This usually it has happened with almost all the countries, but Indian context it is much. It has the lower bound has restricted for quite a long time, and when we were about to start moving up, this kind of situation has arisen. Now, the current monetary policy, there are some references about the capacity utilization. I was just quoting those. In the manufacturing firms expect capacity utilization to recover in Q3 and activity to gain some traction in Q4. So slowly it's a movement up. And the report also, which was released along with the policy document, monetary policy report, in Q2 the investment climate remained subdued, still muted consumption demand and excess capacity are holding back new investment. As per the order book, inventory and capacity utilization, OBCUS of Reserve Bank, the capacity utilization of manufacturing firms declined sharply. This is number, okay, from 62.2. This is basically a seasonally adjusted on its basis, because capacity utilization, one is it is a cyclical, another is there is a seasonality definitely. So there also it is sharp decline is there. So private investment may, however, take longer to stabilize. Okay, so because subdued bank credit and global recession, all this low, so already low capacity utilization is there. Bank credit because of demand is low. There is a bank credit also offtake is also low, as well as global recession. So demand it has to pick up. So now going combining all this, what are the takeaways? Now, one is from the inflation point of view, CU definitely causes the price change, so it impacts. But this relationship is not very static. It's a time variant. So kind of impact it will have on the price change. When we are at the peak of the cycle, impact is different. When it's the trough of the cycle, impact is different. During the exponential phase, it is different. When it's a recession phase, it is different. Now, low capacity utilization would possibly mean subdued investment in new future. How much, how near, what is the near term? That has to be studied in much great detail, because it is still the pandemic situation and is still going on. So that has to be some kind of assumption, some kind of scenario analysis. This can be understood how long it will continue. There can be different assumptions, different scenario. Under those scenario, the possible recovery process can be formulated. Now, Indian context with this kind of over a decade data which is available based on Obicus, the average is 74 to 75, which we stand. But the way Professor Graff has shown the normal capacity utilization, that has to be seen little differently. But in Indian context, we have also seen that over a period, the trend is slightly moving down. So it is in recent years, it has moved down. So we have to relook at the normal part. And CU has moved in the range of 60, 83. This wide range, and this range is almost remain in all the countries, almost in the same range. But basically, it is traveling towards the lower side. So therefore, with respect to the CU cycle, as well as the current position in the CU cycle. So with that, I end my presentation here. Thank you. Thank you very much.
Thank you so much, Majumdar sir. Thank you so much with the detailed presentation. So let's move to the question and answer session. There are a number of questions raised by the participants during the registration. These are general questions as well as specific to Switzerland and India. First, let me request Professor Graff to take some questions. Yeah, Professor Graff. Yes. The first question is how the COVID-19 affected Switzerland economy and how it is different from India. Because in Switzerland, in the first quarter, the growth was about minus 1.9%. Then the second quarter, it was minus 7.3%. In case of India, in the first quarter, it is about 3.1% positive. But in the second quarter, it is minus 24%. So how do you interpret and how do you compare the degree of the second degree of that is how COVID affected these two countries?
Yeah, thanks for this question. Switzerland is known in Bollywood as a tourist destination, right? And tourism has badly been affected. But now tourism is just a very tiny share in Swiss GDP. Switzerland is a manufacturing economy and an exporter of manufactures of luxury items, plus of pharmaceuticals. And while tourism was heavily affected and the lockdown really brought foreign tourism to a stillstand, to some degree, domestic tourism substituted for foreign tourists. And now as it comes to the generally good outlook in the Swiss industry, it's the pharmaceutical industry. In the pharmaceutical industry, not only